Hi, this is Doug English with your October 2022 stock market update. Well, September was as September tends to be. It is historically the worst month of the year in the stock market. So you should not be surprised to know that both the stock and the bond markets moved down in September. We saw about a 2.5% or so loss in the bond side of the market. We saw about a 5% loss on the stock side of the market. Now, you might ask yourself, what is it this time? And of course, it's a collection of things. We have the government shutdown that looks like it's going to happen for some period of time. We have the interest rates continuing to go up, at least as of this point. And the unknown, is the Fed going to go up again? And are we going to reach a breaking point for the economy? And then the large auto workers strike, and that's just the general other beginnings of the election cycle and how much drama is going to come from that. So of course you ask yourself, what should you do? You see everywhere now that you can get a CD at 5.25%, 5.5%. And you ask yourself, well, why do I deal with this stock market stuff? Well, of course, the reason is that over the long period of time, 5, 10, 20 years, you get a much greater return historically from stocks than you do from anything that is secure and safe like a CD. And the reason is you and everybody else has got to be compensated for taking risk. So we do not suggest that you do anything as far as taking money out of the markets because you can make a 5% on a CD. But there's some things that we do in the portfolio that I think will reassure you. So in the first place, we have the rotations, the bond and the stock rotations. And every month, they are looking for momentum. They are looking for the portion of the markets that has positive price appreciation, and they will retreat from the areas that have losses. Well, in this case, in the stock rotation, that position is moving to our cash-like instrument, which is a ETF BIL. And that pays almost a 6% yield. So similar to what you might get in the CD, a little bit better, but daily liquid, allowing us to have the nimble response to go back in when things start to stabilize. On the bond side, we usually have 3 positions in the bond. This month, we are keeping the floating rate bond position because that actually made money in September, and eliminating the other positions and putting them also into the cash-like instrument JPST, which is yielding just about 6%. So with that, your accounts have all automatically become more conservative as we go into the government shutdown and the fears of the inflation spike. The September is the worst month of the year. The first 2 weeks of October are also historically not great. The last 2 weeks can be when you start to see the turn for the seasonality at the end of the year, which is the best part of the year historically to be in the market. So as always, we are here for you at Act Advisors. We are studying the markets every day. We are getting the best research that there is, and we're going to take care of your accounts and look to advance them in the good times and protect them when things are down. So if you have any questions, please contact us here at Act Advisors right away. And thank you for your business.